The Federal Reserve made its first interest rate cut in over 4 years this week. Many consumers are wondering what that means for their wallets. Today, we are joined by Janae Adams with Debt Sucks University to talk about what the rate cut means for consumer wallets. And of course, she is also taking your questions. You can ask your questions about the rate cut by texting 336-379-5775. Well, the Fed's cut rates and everyone is talking about how it's unusual with it being half point. Can you put that in perspective for us? Because a half point doesn't really sound like a lot.
It does not sound like a lot, but it's a lot because they have been raising rates for a couple of years now. So people have just seen expensive debt for a while now. And so now with this cut, they can see a break in the day that their debt, the price of their debt is going to go down.
What does this rate cut do for my money?
So what this rate cut does for your money, we'll talk about the positive part. If you have debt that is tied to the interest rate and you've been seeing it go up each and every month for the last couple of years, you're going to see that those credit card bills are going to come down just a little bit, and any other kind of variable expenses that you have. Now, the bad side is we have been really spoiled with these high yield savings rates because they're tied to the interest rate. So as the interest rates went up, so did those savings yields. Now they're going to start to come down along with the interest rate. So that's the bad part for savers.
Yeah. Is there anything else about the interest rate cut we should be aware of?
Just making sure that you understand that this is not going to be the last one. So everything that I just talked about, those different directions, they're going to continue throughout the rest of this year and probably through 2025.
Gotcha. How could this rate cut and future rate cuts affect the job market?
Yeah, so that is definitely interesting. The reason that the Federal Reserve and Jerome Powell hiked up the interest rates, they wanted to cool off the economy. So they wanted to make debt expensive. So what that did for companies, they stopped investing, they stopped building, they slowed down on jobs. But now the job market is starting to slow, so that's why they're cutting the interest rates. So now companies are going to start to invest, and that could be in people, and hiring could go up in some companies and some industries.
And how will the cut affect the housing market?
So how the cut can affect the housing market, I'm sure plenty of real estate agents are smiling after that rate cut. What it's going to do is bring down the mortgage rates, and the mortgage rates are already starting to come down. They're almost back at 6%. So this 50 basis point cut that they just had this week is only going to help that get down to definitely 6%. So it's going to really help the cost of buying a home.
If I am in the market as a first-time home buyer, what should that person be doing now?
What that person should be doing now is really thinking about where they want to live. Start researching those homes and those prices, and monitor those prices over the next few months. More than likely, spring is going to be a great time for you to buy that first home, but you also need to be saving that 10 to 20% down payment so that you'll be in a better position to negotiate against other buyers. Because if you're looking for a home, trust me, as these mortgage rates go down, others are going to come into the market as well. So you need to be ready.
And everyone is talking about credit scores. Is my score what I should be focused on?
I don't think it's what you should be focused on right now. As the interest rate starts to come down, you need to be focused on paying that debt down. Now that your monthly payment should start to go down even a little bit, you need to pay aggressively to the principal of those credit card bills so you can get them down and get that debt out of your life. I think that's more important to focus on. And if you get it out of your life, then guess what? Your credit score is going to start to go up because you're going to be in a better financial position.
And while we're talking about that, talk about some ways to get that debt out of your life. Maybe some advice on that.
Yeah, so some ways to get the debt out of your life. We still having some nice days around here. We had 80 degrees today. Think about some yard sales on the weekend. Sell some things that are cluttering up your home. Get ready for the fall, and make you some extra money. And as you make that extra money, put that money towards paying down your debt. Also cut out some expenses that you don't think you'll need in the fall and the winter, and be able to take that money and pay it towards the debt as well.
How does a person get their credit score up, and how long would that take?
One of the main things that people can do is definitely pay off their debt. If they have a high debt to income ratio, that is what's causing them to have lower credit scores or if they miss payments. I always tell people the best plan you can do is go to a nonprofit credit counseling agency, nonprofit, okay, because they're not going to cost as much and they're going to really care and help you with your entire financial situation, not just your credit score.
And then someone asked a question here. Will you have to request a break in interest from your credit card company?
Some credit card companies will allow you to do that, not all of them. So the best thing to do is just ask, because the worst thing they can say is no.
Okay, well, we're going to take a pause right here. Right now, we are talking about how the interest rate cut impacts consumers. Janae Adams is here with us answering your questions. So just text the number 336-379-5775. We'll be right back.